Man, oh man, what a move, what a day today. Boy, oh boy, what a fantastic day. Hope you guys made some money out there. And I'll tell you, great example today. We didn't get that big reversal we talked about last night, but we got some new information out of the White House about the debt ceiling. The banking crisis begins to fade away. The markets turned very bullish this morning. Great job today adjusting to new information. We found some great trades this morning with you guys in the morning trade. I know a lot of you guys made money today, so well done on that. But it's time to get back to work, right? I don't care how much money you made today. We're only as good as our next trading day. We get some big moves, some big breakouts on the charts tonight. We got some beautiful trades setting up for Thursday. And as always, I'm going to cover all my favorite trade setups in the video here tonight. Then we have a game plan to make some money tomorrow. Before we jump in and get the game going tonight, a lot we're going to cover in a very important video. Before we jump in, though, make sure you subscribe that we don't miss tomorrow night's video. And if you enjoy this stuff tonight, hit that like button. And as always, give me a shout in the comments section. Thank you so much for tuning in, supporting the channel. But enough of the intro. Thursday is not going to trade itself. Where are the best trades setting up for what should be a we've had a very good week so far, right? Should be another good day tomorrow in our trade room. Everything bullish right now. Bullish market into a range on the S&P, bullish into a range, the NASDAQ, not necessarily into a range of the oil, right? But nice bullish range breakout. On the S&P and NASDAQ, we've got some great breakout pullback opportunities here we'll talk about tonight on the video. I also want to talk about how to trade this if we keep going higher, because these types of breakouts, they do tend to grind higher. So I want to give you guys a game plan if we don't get that pullback. And we'll talk about some shorts, maybe some crown reversals off the high here as well. So we're going to cover the long side for sure, the short side as well here on the Emini and the NASDAQ. Oil's a pretty easy one. Oil's trying to go back up and take out that 74 tomorrow. Would love some breakout pullbacks. I've got really four different variations of that breakout pullback. That way, no matter what we get tomorrow, you'll be ready to capitalize here really across all three of these markets. Now, speaking of tomorrow, before we jump in and talk about the entry patterns I'm watching and the easiest way to make money tomorrow, before we jump in and talk about those setups, let's kind of get on the same page here, because we do have some more big news coming tomorrow morning. We got two things you want to keep on your radar. First of all, the Philly Fed survey at 8:30 Eastern time. Probably one of the biggest news reports of the week. Definitely the biggest news report of the day tomorrow. And then later on in the session, we have the home sales number coming out at 10 o'clock Eastern time. Those are the big events that we know about for tomorrow. Those should be very good catalysts tomorrow morning, no matter which market you're trading. We do usually see the 10 o'clock news has a tendency to really kick the markets into overdrive. So we'll definitely be looking forward to that home sales number at 10 o'clock Eastern time. And if today was a good example, today was a very good example. Markets looked very bearish yesterday, but we got some new information. We started hearing about some very optimistic talk about the debt ceiling, and that's what kind of turned things bullish for us this morning in the trade room. We will continue to listen in for updates. We've got 2 more days left this week, and you better believe we'll be listening in for any new updates off the news wires, for any new updates regarding that debt ceiling. So just be aware of that 8:30 tomorrow morning, 10 o'clock home sales. That 10 o'clock shock is always something we want to keep on our radar. And, will we? I don't think the question is will we. I think the question is when we will hear more about more conversations, more debt ceiling stuff going on Capitol Hill. That definitely is the big variable as we go into here tomorrow. Now, back to our charts though, right? Because of course the money is made on the charts. And if you like making money, I would definitely make sure you watch all the way to the end of this video, because every trade I talk about tonight, all of these markets are very similar. Every trade we talk about tonight can be applied to any one of these markets. So I'll give you a reason to stick around all the way to the end. Let's go S&P and SPY first. We'll go NASDAQ and the QQQs afterwards, and we'll wrap things up with the oil and the USO. As always, guys, this is 7,000 tick chart. These are all tick charts. You can see tick chart time frames in the upper left-hand corner. This, of course, is the 21 EMA. It's not the only indicator we use, but it's the one you're going to want to have to really get the most out of these videos. And of course, don't forget, I do provide 60-minute time frames, 4-hour time frames linked up in the description of the video. I do like to use those higher time frames to give me a directional bias and find some big levels of support and resistance. So if you want to to get a bigger picture look at the markets, definitely check those links out. I'll put all the links we talk about tonight in the description of the video here. So now that you know more about what you're looking at and where to get more information, what's the most important factor on the S&P right now? It's not just the S&P, it's also the NASDAQ. There are really, for the most part, there are three big factors that are kind of tipping us off to where the best trades are likely going to be here for tomorrow. The first one, of course, is this very strong run up into a trading range. Why is that important? Well, if you're a member of my trade room, if you've taken my free trading courses, you know that ranges act like magnets. And when I have a bullish market into a trading range, it really creates a very simple game plan. Find levels of support below the range, wait for a pullback, and use the range as a magnet. That's easily where the best trades are usually going to be whenever we have a bullish market into a trading range. That's one very important clue. The second important clue is a very, very good one, because you'll notice we're coming out of a previous range. Now, we talk a lot about this on these videos. Whenever we break out of a previous range, oftentimes those levels, right, those highs in this case, right, those levels of resistance now act as support. And it's a classic breakout pullback, right? So breakout pullback, you got to be thinking there's a lot of buyers who would love to come back down somewhere around these areas. Boy, those line up pretty much the exact same thing with the first clue. Right now, the third clue is the one we've got to be aware of. We're obviously very bullish into a range right now, but we're sitting right up at some major areas of resistance. And so what does that tell me? It tells me that I would probably be wise to wait for a relatively deep pullback rather than trying to buy high up here, right? Might not be the best place to be buying right now. Probably better off to wait for a price to go higher to confirm we go through that level, right? That's why I do want to talk about tonight if we do go higher, because there is a very simple game plan to make money if we do go higher. Here, we'll talk about that in a moment. But you got to think, though, until we can get that confirmation going higher here, you've got to be thinking a deeper pullback to attract, more of the smart money in the market. Probably going to be a little bit wiser decision on that. So there are really kind of three things we want to talk about today, right? Where's my favorite trade? My favorite trade, you can probably imagine, is that deep pullback into this area. There are three different ways in which we can trade that deep pullback. Remember, markets are very unpredictable. Sometimes we get things we don't expect. So we're going to kind of game plan three different ways to buy that pullback as we go lower. We'll talk about that here in a moment. I also want to cover later on in the video, what if we go higher, right? There's definitely a game plan for that. And then also later in the video, we'll talk about how to short this thing, right? Because if we're anticipating a pullback right now, can I short this? We can, but we have to be very, very selective because it's a lot of momentum and that range becomes a magnet. So let's not waste any time. Let's dive right in. My favorite trade for tomorrow, of course, is going to be that deep pullback. And what you want to think about here is if I can get a really deep pullback, the idea here is pretty simple. It can be very difficult to tell how deep will it be. Will it be here, back up? Will it be here, back up, right, back up? Will it be all the way here, back up? It can be very difficult to pick a bottom when it comes to these pullbacks. So what I learned to do a long time ago was I wait for the pullback. I don't try to pick the bottom. I simply let the sellers come in on the next pullback, let them try to get short, and I simply buy right into those stop losses to create a bit of a short squeeze. That short squeeze, as those sellers get stopped out, oftentimes will snap this thing right back up to retest the high. This is a classic failure pattern. It's a seller failure pattern we talk about in our free trading course on the website. Now, a lot of times what happens is as we get these, we'll start to rip right back higher, and we can oftentimes find what we call a failure into a pullback combination. All right. So again, tough to predict how far it goes, right? It might go even lower and then back up. We don't know. So rather than trying to pick that bottom, I simply wait for the bears to show me what they're doing, show me their cards, right? And then use their stops as fuel with a failure pattern. Okay. That failure pattern oftentimes will pop up and then pull right back to that moving average. We talk about this, right? It's called the price action cycle in our free trading course, failure into pullback combo. And we know where the market wants to go. It wants to go back up to retest those highs here, right? That is kind of the perfect situation we're looking for. Now, there's some variables about this. For example, sometimes we don't get that nice pullback combo like that. Sometimes the market will start to grind and go higher. If it grinds and goes higher, use a trap setup. All right. Now, traps are also covered in the free trading course, right? So if we don't get that beautiful pullback we want, right, and we start going higher, start seeing higher highs on this, that trap, right? That's the next best entry. Again, trying to go back up to retest the high, right? So failure pattern, and then maybe a trap pattern, right? Like you guys are learning in the free trading course. Now, I've talked about this free class a bunch of times already. I know that most of you guys have taken this free class. You've learned all of these setups I'm talking about right now. But if you're one of the few folks who still haven't taken that free trading course yet and learned all my favorite entry tactics, I'll put a link up there for you real quickly in the upper right hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will teach you a simple trick to know exactly where the best winners are going to be each day, and I'll make it easy to start making money with 4 of my favorite entry patterns. If you're like me and you hate missing the biggest moves, the best trades each day, definitely grab that link, take that free course. It is perfect for someone trying to make the jump into full-time trading. Now, we talked about kind of the dream scenario, right? Let's cover a couple of different variations. Like I said, there's 3 different ways this could happen. For example, we may not get that deep pullback, right? I'd love to get that deep pullback and back up from there. Okay, what if we don't? The market's pretty bullish. What if we hear something tomorrow morning, more optimism about the debt ceiling talks? Who knows? If all we get is a shallow pullback, like let's say back to that 41.60 little trap level right there, we may only get something like this and try to go back up into that trading range, right? There could be a steeper channel like this coming off that high. The potential there is very good, all right? Again, not my favorite trade, but we're going to take whatever we can get, right? We mentioned earlier, right? Today was a good example where you have to be light on your feet and be able to be flexible with where you go with this. Now, what is my concern about buying a shallow pullback? I'm buying relatively high, right? I like momentum. Momentum's great right now, but if I buy a shallow pullback, I'm buying relatively high, right? We talked about that big top over there kind of staring us right in the face right now. So you're taking my free course right now. What is the best way to get long if I'm worried about buying too high? A trap, right? A trap is necessary if all we get is a shallow pullback, right? Again, we don't want to buy high, and so what you do is you look for the market start going higher and making higher highs. Okay, that's the key to a trap. Higher highs, and then grab that trap below that prior low. Okay, so a shallow pullback, as we always say in our trade room, right? Deep pullback failures, right? Deep pullback failures, right? Shallow pullback traps, baby, right? So traps are the second variation of this setup. The third one is a V-bottom. Okay, V-bottom. We may get this thing to rush lower. There may be so many buyers down here, right, that want to buy this, and it just whoop right back up again. We may not get the ability to trap the bears in. What do you do in that scenario? Well, you do the next best thing. You look for a bear trap. So what we'll do is, if they run lower like this, what will happen is it'll begin to start to pop and grind and run higher. Okay? These can be frustrating because it's very tempting to go and chase it. Right? That little brain of ours, that monkey brain of ours will start getting FOMO as we start going higher. I know I'm not the only person that feels like that, right? You're like, crap, I missed the entry down here. I know where they're trying to go. Get me in. The biggest thing right now is you don't want to buy high, right? You don't want to buy high, right? Major resistance. If we buy right here, right? If we buy right here, we're buying technically very high. Our risk is here, right? Our reward is here. We don't want to do that. Right? We don't want that. What you do in these cases is you draw a trend line off those highs. You bring it down off that low, right? Now watch. I'm going to mark up some prior swings and go looking for a trap, right? The key is you want that trap entry, okay? Now think about the risk-reward ratio, right? Now here's your risk. Now here's your reward, right? See, it's much better. Once you begin thinking about risk-reward ratio, you're gonna be putting yourself in better trades, and well, basically more people will take that trade, right? There's a lot more people that will take that trade, right, than taking that previous trade where you're buying high up here out of FOMO and your risk is here and your reward is like that, right? Only rookies are trading right there, right? You trade up there, you trade with rookies, right? You trade traps as we go back to the highs, right? You trade with pros. Right, people who are more disciplined, more seasoned, they've earned the title of being professional. All right, that's a third variation as we go. We love these in our trade room. Obviously, I want to get that deep pullback, trap in and back up. I want to get that, right? But hey, we take what the market gives us. All right, guys. Now, with that deep pullback, shallow pullback, traps looking good. Next question is, right? What if we go higher here? Right? What if we go higher? What if we go higher? And also too, could I short this thing right now? You know, those are some more scenarios we'll talk about as well. Let's keep going, right? S&P looks pretty good on the goal there. Let's grab a look at the NASDAQ now. Okay, over on the NASDAQ. NASDAQ is very similar to the S&P in the sense that we have a bullish move into a range. Right? What does that range tell us? The range tells us it acts like a magnet. What do? We go out, we find levels of support, right? Measured pullback, support, right? And we look to, again, buy that deep pullback, right? So ultimately, same scenario there. The third scenario, which is very interesting about the NASDAQ right now is the third scenario. Did I just skip number two, apparently? Apparently I did. Anyways, number two scenario here, back to planet Earth here, Joe. Number two scenario is that range, right? So we had that range we talked about last night. We rotate lower and blast a classic example of what do we call this, guys? We call this rotation off the low. If you watch my videos every evening, right? We know these kind of failures going lower can snap and punch. Bottom line is that's a range breakout. And what does a range breakout tell us to do? It tells us that level, really this whole area here becomes the juiciest, most attractive area for buyers here, right? So if you think about it that way, that 13,560-ish area is really where the buyers are licking their chops, right, for the next entry on this. And again, right, we don't know, will we get that far, right? Will we get a relatively modest pullback like that? Will it be a strong deep pullback? We just simply don't know, right? So we know that the three scenarios I gave you, though, those that will give you the roadmap you need or the tools you need, right, to get into whichever setup or every situation that we get. Now, the only difference in NASDAQ is the NASDAQ, I mean, we're pretty much in blue skies right now. There's no big level of resistance up overhead. We're not at any major area of resistance, but you will see on the 60-minute chart, the 4-hour chart that I linked up in the description, you will see we've got some pretty hefty levels up overhead, 13,680, 1371, and it's probably safe to say that buyers are probably not looking to buy too high here. So let's talk about if we go higher. Okay, we'll talk about how to short this thing, right, a little bit after that. Okay, if we go higher here, it's very, very simple. We don't want to be chasing markets as they go higher. So the minute we make a higher high in price is the minute that this area becomes a very, very attractive area, right, to be a buyer. We talk about this a lot in our trade room, a lot on these videos. Anytime we see a strong move, a shallow pullback in price, okay, shallow pullback and a higher high in price, there is a ton of money waiting to be allocated right at that area. Right? We call these two-try traps. They're basically trap setups you guys learn in the free trading course. All right? So again, strong move, we got that. Higher high in price, we don't have that yet. Right? So if we were to strong move, shallow pullback, higher high in price, be very careful buying as we go higher here. We then know that area right there, right? That's where we want to be looking for the entry. Okay? Now keep in mind, right? Whenever we look for trap setups, what do we need? A good, strong signal. So in my free trading course, we talk about the fact that we need a good, strong signal coming off that, right? Closing off the moving average. So don't be too aggressive, right, on those traps. Wait for the signal I teach you guys in that free trading course. And don't be surprised if it was to head fake off the high, punch lower, right? And again, we don't get that signal right there. It punches lower. We then get bears coming in, get them trapped in, failure, pullback combo, and back up from there. All right. So that's the way you want to look at trading this as we go higher. The only other kind of variation of that would be if we were to pop up and begin to grind, right? And grind higher here, right? Like that. In those situations, we do is we draw trend lines off those highs. We bring them down off those lows, right? And we start looking left and finding prior swings and then waiting to get down around those channels, get underneath the moving average, trap setups, failure setups, right? And go from there. All right. So if we do end up grinding higher here, all I'll do is just create a new trend line off that high, right? Bring it down off these big lows, right? And then simply wait for that first test. First test is the best test. And again, if it was to pull back to the low of that channel, right, we get below the moving average. That's a failure pattern coming in, right? Pullback combination. You guys are learning this stuff, right, in the free trading course. All right. If it was to pull up and really rifle lower, right, what do you do? You wait for those bears, right? We don't try to pick that bottom. Very difficult, right? You don't know how far it'll go if it just rips off that high, which the NASDAQ loves to do in case you've been paying attention. If it rips off the high, we don't short it down here. We wait for the bears to come in, try a couple times, we trap them in, right? And we look for that run back up again. So same basic idea we talked about a moment ago on the S&P. Just be careful if it does push higher here. Wait for that pullback, and then once you know the pullback, one of the hard parts about my job on these videos is, we are always getting new information the next day, and so we have to make some adjustments to that. But that's why our trade room is there, right? 8 o'clock Eastern time tomorrow morning. Okay, so that's the game plan if we go higher, right? That's the game plan if we go higher. Now, how would you short something like this? What's the best way to short a really strong bull trend like this? A crown reversal. Okay, crown reversals are one of my favorite ways to trade reversals. Very simple pattern. Strong move up, right? Bulls have control. As we pull back, the buyers try once to go back and retest the high. They fail, okay? We go back. Remember, buyers want to buy low. We pull back again. They try again to retest the high, right? And let's do it this way, right? We pop up, pull back, buyers try once to retest, they fail. Remember, in this situation, we're trying to time a reversal off the high, okay? And to do that, we need to have really 3 components. 1 is a major turning point, 2 are signs of exhaustion, and 3 are going to be a stop run. Okay, so for example, if we're trying to turn this thing over, we need to see the buyers starting to show signs of exhaustion here. We use the 2-try rule for that. Buyers want to buy low. So as they pull back once, that's buyers trying once. As they pull back to a lower low in price, buyers will come in twice. And if they can get above that prior swing without retesting that high, that's a crown reversal. It's basically a bull trap entry, right? Getting underneath the moving average, right? That same trap signal you guys are learning. I know it's a bit late in the free trading course, right? But that same trap signal, that's the way you short a very strong bull market. Again, we want to be at some level of resistance here. So we got up overhead, right? 13,680. You'll see that listed on the 60-minute, right? So if we can get up maybe a little bit higher here, right? Up into these highs, 1 try for the buyers, lower low, 2 try for the buyers, that crown reversal, right, as we go. You can get more aggressive on these, right? For example, if we end up pulling back, 1 try for the buyers, 2 try for the buyers, right, and that bull trap as we go, right? That'd be the more aggressive way to do it, right? See how it's a crown reversal, right? Buyers try once, we go lower, buyers try twice. Just keep on telling yourself that buyers want to buy low, right? So as we go lower, the buyers will come in, make them try twice, get that trap above the high, and that's how you short these things off the high. Because again, for example, we don't want to short it as it's going lower. Right? We do not want to short this as it goes lower. Why? Because we're so bullish. And we know there's a good chance we're going to be walking right into a trap, right? You don't want to short it as it goes lower. One of the best shifts in your mindset need to be, I want to buy it as it's going lower. I want to sell it as it's going higher, right? So as we pull back here, buyers once, buyers twice, right? Now, right, as it's going higher, we then look for that signal for the short. Okay, that way, if we do end up running into a buzzsaw down here and a bear trap, what we're looking for tomorrow, we'll at least have that, at least have a one-to-one target on it, at least get some profit out of the trade, and then we can worry about the rip up going higher from there, right? So crown reversal off the high, that's the way you short a market like this. It's not easy. It's definitely not easy. And one more thing too, I talk about this a lot in our video classes, but when you're going against the trend direction on these, those are not full size positions, at least not for me, right? I'll go half size, quarter size, very small size, right? Load the boat, load the boat when those deep pullbacks, right? Load the boat, full size positions on your best trades, but on the reversal stuff like that, remember, if you're right, if you're correct about a reversal, you don't need a very big position to make a great profit. So we don't need to load the boat, and really in my eyes, we shouldn't be doing that anyways, right? So it's a half size, a quarter size, right? Something that you can absorb that lower probability of success. All right, guys? By the way, if you're enjoying this stuff right now, give me a shout out in the comments section, hit that like button, and hopefully you've subscribed to our channel here on the YouTube. Let's keep going. S&P's ready, NASDAQ's ready. How about some oil here right now? Oil is very, very similar. The only kind of big difference on oil is that we have not reached that big objective yet on the oil. We can be a little bit more aggressive, I feel like, on oil right now. Now, you might notice this is the 723 contract on crude oil tonight. We do have rollover. You can pretty much set your clock, by the way, on around the 18th of the month. 18th of every month, you're going to usually see rollover on crude oil. It might be the day before. It's very rarely the day after, though, right? It's almost always that 16th, 17th, 18th, and I think most of our software now will tell us when we got rollover. But be aware of that. This is the 723 contract here on the oil. Same basic idea, right? Very strong run going higher, right? Very strong run. Anytime we see a strong move like this, we expect a pullback and a retest of that high. It's not the same thing as that range we saw on the NASDAQ and the S&P, but it's almost the same thing, right? The second component here is this trading range, right? Kind of that bullish move up right into a range. There's that rotation off the low, like we mentioned earlier. Okay, you can probably, finish my sentence right now, right? The high of that trading range now becomes a very, very attractive area for a breakout pullback pattern, right? Going higher here. And the third kind of variable of this is you'll notice right now, we're basically looking to go back up. That is also a bull market into a trading range, right? The bears, of course, try to hold that breakout pullback, and just getting obviously failing now and running back up. This is potentially, and you'll see this listed on the 60-minute chart linked up in the description. We now start thinking about possibly a pendulum swing going higher. So a very bullish environment right now on the oil. Their goal right now is very simple. Take out that high at 73.87. That's pretty much the one thing these buyers have on their minds right now, is to snap this thing going higher. So I'm not going to repeat everything I talked about so far. It is very, very similar to what we've talked about. I don't like the short side on this one because we have not reached our objective yet. Right? For me personally, I would not be looking for shorts on the pullback on this. Now, once we do get to that objective, sure, then a crown reversal off the high, very much in play at that point. But until we reach the objective here, like I said before, the S&P, we're at the objective, right? NASDAQ almost at the objective. We're not quite there yet on the crude oil. Other than that, though, right, looking for that deep pullback, trap the bears in, failure pullback combo back to the high, right? Possibly that V bottom, right, into that pop and grind. Not just your favorite dance move, but also my favorite ways to trade the pullbacks as well, right? The old pop and grind entries we use in our trade room. We may not get that deep of a pullback, right? If we go lower and all of a sudden we start seeing the bears come in and they're trying once, higher high, right? Because bears want to sell high, right? So higher high in price, trap below that low, right? That's that shallow pullback trap. Right? Shallow pullback trap. Make sense? Right? So deep pullback, wait for failures, use stops as fuel, right? Or deep pullback for that V bottom trade we mentioned earlier. Shallow pullbacks are fine, but the challenge with buying high, you're buying relatively high, is you're not going to have as many buyers, right, who are interested in that trade. Okay, there's a lot more buyers who want it down here. So if you're not going to have, if you're not going to have the big money, right, coming in and buying shallow pullbacks, you need to get something else to give you the fuel, right? And that's where stops come in, right? All those stops get rung. That's the fuel you need, right, to run it higher. Does that make sense? Right? When you buy a shallow pullback, you're not leveraging where a lot of the other buyers are going to be. The self-fulfilling prophecy. They just aren't going to be buying that shallow. So in order to compensate for that self-fulfilling prophecy, we need to get some stops getting run. And to get stops getting run, we have to trap those bears in. That way we know they're in and we know where their exits are, and we can literally just buy right into their exits, right? That's the reason why traps are so valuable on shallow pullbacks. And then speaking of traps, if we were to go higher here and go higher, right, all of a sudden that low becomes very, very attractive, right? So it goes higher here. Remember, we know where the market wants to go. So if we keep on kind of popping up, going higher here, and it could be, right, it could be something like this too, right? We might go up like this, a little bit higher like that, right? And then start coming in and below prior swings there, right? Below prior swings there. Just wait for the proper signal, right? Wait for those proper signals, get below prior swings as we're going higher. All right, guys? So very, very similar to the NASDAQ. The only difference, of course, is that reversal. Right? I usually don't look for reversals until I get to where the market wants to go. And right now we have, it's pretty obvious, right? These highs up here. Once we take those highs up here, then we can start thinking about those crown reversals and those shorts off the high. All right, guys? Boy, great lesson tonight. Hopefully now we get a game plan to make some money tomorrow. If you enjoy this stuff, please hit me up in the comment section. Give me a like down there and make sure you subscribe. In the meantime, tomorrow morning, don't forget the game plan is ready. If you're looking for a place to come out and learn and trade this stuff with us every morning, we open up every morning, 8 o'clock Eastern time. We trade this whole entire thing together every morning in the morning trade room. I'll put all the membership links to join us in the trade room each morning. I'll put the free class links to learn the fundamentals of the system we use in our trade room, and I'll put all the higher time frame charts. I'll put everything you need down in the description of the video here tonight as well. If you need any help getting access to the trade room or the free trading classes or anything, call us. Shoot me an email. I'm always here. Use live chat if you got any questions there. I don't get to the comments in the comment section as fast as I will if you call the office or send me an email or use live chat, right? We're always here. Obviously the phone is easiest, right? So if you need help, call or use live chat. We're always here to help out if you need us. All right, guys, great job tonight. Get some rest. Big day coming tomorrow. Hope you learned a bunch tonight. Hope you used this knowledge to earn a bunch tomorrow morning. And as always, hopefully I'll see you tomorrow morning in the morning trade. If not, we'll come back tomorrow night and get ready for Friday's trading session. Guys, thanks for being here. My name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.